Hey everybody, oh the market kind of sucks right now. Oh, I was kind of singing over lo-fi. Bring it back up. Somebody told me to beatbox, but I was just gonna sing over lo-fi today. Oh yes, we're all gonna get it. It's a little bit dicey in the markets right now, and it really fucking sucks. But this is why we're stacking stable coins, oh yeah, cause we're all gonna make it. Alright. Sorry about that, guys. Sorry to subject you to that singing, but I wasn't really feeling beatboxing today. And hey, we are all gonna make it, right? So, yeah, it's a kind of a shitty day in the markets in general, but remember, these are predictable things. The macro environment gets bearish from time to time, and these are cyclical things. We've kind of seen this coming for quite a while. One takeaway from all this is that crypto just can't, it's not to the point where it's decoupled and it's in its own universe. It really can't fight these macro trends right now. The sort of dual headwinds of a more aggressive Fed because of this inflation, and then you have this war in Europe, which is exacerbating things. And it's never a good look, when you have the Russians talking about nukes and things like that. A lot of fear in the market right now, and it could get much worse. I think eventually crypto will sort of stand on its own, but we're not quite there yet. But we've known this was a big possibility. Fox, of course, is not doing well today, but this is precisely why we've been stacking stablecoins for several months to put us in a stronger position should this come to pass. Prepare yourself mentally. Like this market could certainly get worse, but I may have mentioned this last week, but I personally have never had a bigger disconnect between being very convinced that we're headed lower in the short term to intermediate term, very bearish on those time frames, but I've never ever been so bullish about crypto in the long term, because you just see all these wonderful signs of adoption. Things are progressing on the tech front with things like scaling, so we are all gonna make it, I promise. So yeah, with respect to our treasury, we have I believe we're close to 8 million now if you count our USDC holdings, UST holdings, and then you add in also our one Fox, of which we have a large amount in the Angel Vault. And if you just add that all up, that of course is redeemable for USDC. We're not yet at our goal of the initial goal, at least, of 10 million. So I would argue, guys, that it's sort of the original thought process with that 10 million goal was 18 months of runway at a $5 or $500,000 a month spend. Our budget has gone up considerably since then, maybe north of like 700 a month. I would argue that once we hit that 10 million goal, we should consider doing 18 months at our current run rate, or else we have a scenario where potentially, we're looking at having to make tough budget calls. It's always easier to reduce the budget or to increase a budget than reduce it once people are used to getting those funds. There was some really interesting discussion yesterday in the general channel regarding, given our current emissions on the market with the Olympus bonds, could this potentially hurt the price of Fox? With Olympus, there's a time lock of a week before people can sell. Of course, it is discounted, and I think that it's certainly a point worth bringing up. Is that potentially could impact the price in the short term, even with that time delay. But that it represents a small amount of Fox relative to the amount of Fox we have. Another super important thing to bring up is this is just one tool in our toolbox for raising stables. We're going to be experimenting with Hedgie beginning next week, this is pardon me. This will have an 18-month time lock, so something that really won't impact the market in the short term. Excuse me while I have some water here. Me. Okay, much better. This will allow us to raise money raise stable coins in a way that doesn't really affect the market at all in the short term. It's also worth remembering that not doing this puts us in an extremely vulnerable position. So, stacking these stables is super crucial, but it is good to have more tools at our disposal to do that. Let's see. John said, I don't really count that. I think Kent missed a nuance of our USDC in the one Fox USDC pool. Let's see. I believe we're talking about the LP, the one Fox LP. If you don't count that, the funds in that, then we're at somewhat less than 8 million. And again, even if we do include that in the our stable stack, I would argue that we maybe really shouldn't, because we don't want to be pulling out funds potentially from, say, Angel Vault in a way that could impact other things. You kind of have knock-on effects. I would argue that we need 10 million plus of just stables on the sidelines and not I wouldn't want to count things employed in other areas. But it is worth mentioning that, the one Fox, we do have the ability to pull from. Yes, a good time for the state of the Treasury. Absolutely. This is the dashboard stuff. We're going to be focusing on that shortly here. It's definitely a good day to talk about the Treasury. Before we dig into that, there's a couple TMDC related proposals. One will be going live imminently. This is a effort spearheaded by the TMDC and Rotorless in particular, asking for another 60 million Fox for us to work with on the TMDC. The results of what we've done so far is in a spreadsheet linked in the proposal, in ideation. And again, that'll be going live within the next 12 to 24 hours. The nice thing about that is upon a successful vote, if that is successful, then we'll have a new allocation to work with just in time for the Hedgie sale, which is great. Also, Justin from Porter has posted a proposal officially on chain here. This relates to working with Porter as a launch partner and kind of carving out the TMDC to make decisions on that specifically. The nice thing about that is it's sort of, if we're giving the community is giving the TMDC responsibilities with the proposal, that's kind of separate from that 60 million Fox allocation. I really like how we're approaching that, or how he's approached that. It's also flexible enough, to the point where this does not mandate any sort of action immediately. It's it's kind of a signal that, that we'd be working with Porter, pending, successful reviews of audits and things like that. I'm in favor of this because I think it could be a good fit and another cool tool in our toolbox. So before we jump into the dashboard stuff, let's see. Do we have any additional thoughts? Cool. Darwin and Seth have really been spearheading this initiative, really down in the weeds on creating a dashboard that is not only comprehensive and includes our various positioning in DeFi, but also updated. So I believe it's to the point where most of these numbers can get updated essentially every day. The goal is to have real-time transparency where, at any minute you look. But it really, of course, and crypto does change pretty fast, hence the need for real-time transparency. But this is a huge improvement over what we had. So that said, Seth, if you wouldn't mind jumping up and Darwin as well, if you're cool with that. This portion of the show is going to be dedicated to just digging in. We don't have time to really go through things on a granular line-by-line basis. But and another thing worth noting here is this is still a work in progress. That we've been moving in the right direction, but it's certainly not a finished product. Hey, Seth.
Hey.
How's it going?
Great day to buy crypto.
It probably is. I mean, I'll be honest, I'm not touching any crypto for a while. I think we're going to have a lot more downside. Not because crypto sucks. Crypto is awesome, but just because the macro is so tough right now. But in the long run, maybe it is a good day. Or maybe I'm completely wrong, and maybe I'm a contrarian indicator. But time will tell. Hey, Darwin.
Hey, hello. How are you today?
Good. Yeah, thanks, guys, for all your awesome work on this. So one thing that's, if anybody's been following along with the dashboard channel, we have links to 4 separate documents, separate spreadsheets. These are spreadsheets specific to treasury wallets, revenues, expenses, and performance. Seth has also created an accounting spreadsheet, but guys, for those of you who are, for the benefit of Foxes who are kind of unfamiliar with what to look at, what would you guys recommend digging into initially, and where should they look to for like different insights?
Right. I think the income statement is a great place to start. It just shows you, what are we making, what are we spending, right? The most fundamental aspect of any business. And this chart shows the big picture, and essentially we're making more over time and we're spending more over time. That's the basic insight there, which I guess makes sense.
Excellent. I actually don't have Zoom up yet. Are we screen sharing this right now, Seth?
Yes, I am.
Perfect. Okay.
So this Gnosis expense sheet is also helpful in helping to understand how the workstream expenses are changing over time. And essentially what it's showing is that last year, the expenses were kind of unstable, which makes sense because we were still forming the DAO at that time. But starting this year, we have we're increasing our spending, but it's relatively slow and stable. And we also have a bunch of pie charts here breaking it down by work stream. And the basic gist is most of the money is being spent in engineering with 34%, product with 15%, marketing and growth each have about 13%. So that's more than half of our expenses coming from those three work streams. Which also means, I suppose, if you're looking for work, those are probably the three best work streams to look in. There's also the treasury here, and to no surprise, the vast majority of it is Fox. We have a small but, 6 million, small but increasing amount of the treasury in stablecoins, which makes sense since we're heading into a bear market. Now, the biggest of our expenses is actually not the work streams, it's these Olympus bonds. Now I understand what Willie's been talking about when he says liquidity's being really expensive. So we're spending, what is it? So we're spending about 500 grand on all work streams combined. And we're spending also that much just on the Olympus bond. So there's also a breakdown of our revenues somewhere. Here we go. So we have revenue from multiple sources, Tokamak being one of them. So in my own spreadsheet, I have a chart showing our income from all of these sources, and basically the income's just increasing over time at a decently steep rate. So I think the overall conclusion is that the DAO is growing, our expenses are increasing, but our revenues are also increasing, and so we're relatively healthy.
Yeah, the charts are looking good up and to the right in general. It's sort of like the things we can control. Of course, we can't control the price of Fox, but we can make smart decisions that generate revenue for the DAO. And we're still in such early stages too, where there's going to be a lot more revenue sources. Amazing to see this in visual form and just I think the DAO comes to life a little bit when you see these charts. Like, it's one thing to kind of mentally have your head around this, but to see these charts is really cool, and a great use of the fact that everything is available and transparent. Eric says in the chat, the Olympus bond chart is cumulative, so not quite right to compare it to monthly workstream costs. I think that's a fair point. This is a kind of work in progress. So some tweaking is probably needed as we go along.
It can't be helped. These are 4 different spreadsheets, and some of them have a whole lot of subsheets. So there's a lot of data to process.
Hey, is that Olympus bond chart cumulative?
Yeah, that's what Eric Voorhees said.
Yeah, I know that's what he said. I'm asking if that's. Do we know that's true? Because I know that we're selling more and more.
Looking at the chart, I think the net losses is what's cumulative. So the amount that we've basically lost by trading Fox for stable coins, that chart did look cumulative. And so I think it was saying that in total, throughout the duration of the Olympus Bonds programs, we've spent about $500,000 in total, which is equivalent to what we spend each month on all work streams.
I mean, could that be true? Because we've gotten millions in stable coins from the Olympus bond. So how could we have only spent 500,000 in total?
Yeah,
Because we've acquired millions. So like, let's say we've acquired $5 million total. We've spent $5.5 million.
Oh, the net gain. I see.
I think that's right. Is that what you guys see as well, Darwin and Seth?
I'm sorry, can you repeat that?
Yes. So the cumulative chart for the expenses for the bond program. It's about $500,000 in total, and what that $500,000 represents is how much more we spent in Fox to acquire the bond proceeds. Is that right? Cumulatively?
So, yes.
Cool. Thank you.
I mean, looking at the chart above, I don't know if it's that important, but looking at the chart above, I don't think that's net. I think that's net for the month. I don't think it's cumulative.
Yeah, yes, you are right. That is the monthly cost for the Fox token.
Yeah, this is the monthly. It's the monthly net loss.
Yeah, that is like. So the chart that is presented said right now, that is the revenue for all the stablecoin and the LP and whatever we receive minus all the Fox token. So that is the net loss in this case. But it said if you scroll down, that one scroll up.
Yeah.
That one shows like the color kind of pink is the Fox. So that is on a monthly basis.
Yeah. So that's not a cumulative chart. It's just that we have been losing more and more every month, because the more bonds we sell, the more we lose, and we're selling more and more every month.
Exactly. And if you go to the row 20, which is the value of the Fox token sold every month, you have like every month the amount like $162,000 in October, $14 million in April. And said if you go to the tab Olympus Net, I have there like a table with the actual amount of Fox token per unit. So row 20 is like actually all the Fox tokens.
Yeah.
So it is not accumulated. It's like month by month, like expenses month by month.
Okay. Thanks.
Yeah, to help people understand that chart, it may be useful to explain sort of what we're using Olympus for and sort of what's the strategy there.
Yeah, well, Olympus is, we sell bonds, which basically just sells Fox at a discount for USDC, and currently we're doing it for USDC and ETH. So it's just a mechanism besides selling Fox on Uniswap, just entering orders for the DAO to trade Fox for USDC. We do it through these bonds, which is better from a market perspective, but the cost of that is that we sell the Fox at a discount. But I think we're good. I mean, I think this is good for a good overview. So thank you, Seth and Darwin.
Mm-hmm. work on this is continuous, so I think we'll have a lot more to show next month.
Yeah, you guys are rock stars.
Thank you, guys.
Cool. Yeah, guys, and if you ever want to see the latest and greatest, just jump into the dashboard channel and you can follow along. So next on the agenda is something I just wanted to briefly cover, and this is the fun and exciting world of DeFi insurance. Only crypto can make insurance exciting, right? But the fact is, we have exposure to various risks in DeFi, specifically like smart contract risks. Some of the larger sources of exposure are around Rari Fuse, where we have loans out, and then of course OneFox and Angel Vault. So what's interesting is there's actually more options now in the DeFi insurance world. I can't recall who had mentioned this initially, but there's something called Risk Harbor out there. Sorry, Seth, I'm just going to briefly move you to the audience here. Risk Harbor is kind of a new alternative to Nexus Mutual, which is the gold standard thus far. They've done a really good job of offering a lot of insurance. They do offer insurance on Rari, which I think Professor McCarthy pointed out recently that that could be a good idea to insure that position via Nexus. Nexus uses a kind of governance mechanism and crowdsourced voting mechanism to confirm claims. So what was fascinating to me about Risk Harbor is this is a project that instead aims to kind of take the subjectivity out of the process, and they have essentially kind of a online on-chain sort of compiler thing that can detect faults in the smart contract. So this is where it gets a little deep. Is like I'm unclear how they can say with certainty that their contract is accurate, impartial, and decentralized. But it's an interesting different paradigm because they're approaching the claims process differently, and they profess to offer the ability to quickly pay out claims because it's a very cut and dry thing. If the system detects a fault, something has gone wrong in XYZ contract, then it pays things out. So what's interesting about this with respect to ShapeShift is they do have coverage for OneFox. So this might be something worth considering. But that said, I've just done some initial research the past day or so. Has anybody out there in the audience or in the chat dealt with Risk Harbor at all? Do you guys have any insight into that? Because I was just happy to kind of see a new alternative in the insurance space. I think it may be worth digging into more, especially given our heavy exposure to OneFox. So a few caveats here are this does not cover sort of like off-chain things. For example, if there is some sort of like what's a good example? Like let's say the OneFox team, or let's say there was some sort of hack that led to like a draining of funds. It was not related to like on-chain stuff. That would not be covered. Sorry, I said OneFox team. That was retarded. Ichi team. Yeah, like let's say that something went wrong. There is something malicious happening off-chain. I think that's highly unlikely, but that sort of thing would not be covered here. What is covered is like your classic sort of on-chain smart contract clusterfucks that we've seen so many of. So something to certainly keep in mind moving forward, because we're just going to have more and more exposure to these various things. Kind of as a ballpark figure, it seems like insurance is surprisingly cheap. Last I checked, I think it would have been about $3,000 a month to cover $1 million worth of our OneFox. So I just wanted to put that on everybody's radar because I thought it was pretty interesting. Again, it's worth some more vetting in terms of how Risk Harbor actually facilitates all that stuff. So if you guys have any insights into that, please jump into the Tokenomics channel. A quick update on VFox. So we launched VFox to the public last Wednesday. We've already gotten some interesting leads, and John, Willie, and myself are already in some discussions about potentially our very first deal. So hope to share more on that soon. This is like one of those weird cases where, I love maximum transparency, but going through a deal process, it's sensitive, strategically sensitive. So this is one of the rare cases where I sort of have to suppress the urge to be maximally transparent. But potentially what we're working on now could be very exciting. I think a win-win for both projects. So be on the lookout for more news with that. As a reminder, we have up to 1 million initially to allocate, 1 million USD to allocate on early stage projects. Let's see. Professor says the premium for one Fox seems super high. Whoa, yeah, that does look quite high. So these are the kind of questions to really examine as we as we look at this. That doesn't make any sense. Huh. Okay, maybe that's looking more reasonable. Anyway, yeah, this is an early field, so just this vertical of insurance is early, and probably some tricky navigation around this space. And yeah, with VFox, don't hesitate to ask us in Tokenomics any questions related to that. We will actually be rolling out a regular update about VFox to the community now that things are getting rolling. Look for something on the order initially of maybe every 4 weeks, maybe every 2 weeks. But we still have to figure this out. But we want to provide people with like a nice updated sense of what's happening on a regular basis. And I think things could get very, very busy quick in a good way. So we've come to the last item on the agenda, and this could actually take a while because it pertains to the TMDC, but it's also a broader community discussion, and we have a full half hour for it. And we actually have a guest as well who can speak to this. So specifically, we're talking about the Core 3 upcoming vote on Tokamak, or is that live now? You guys might remember Core 2 was the amazing funding of creation of the Fox reactor, thanks to an amazing grassroots effort we had. It starts next Monday. Okay, so upcoming very soon. As Toke holders, we have a say in how we're going to vote in terms of this new core. We have there's some interesting projects that we're very familiar with up there as potential candidates. So yeah, I guess anybody that wants to talk about core, come on down and let's dig into it. Or as one of my favorite podcasters, Anthony Sassano, likes to say, let's get into it. We also had, I think we have somebody in the crowd that can speak directly to this as well.
Hello.
Spada Boom, welcome.
What's up, man? How are you?
Pretty good. How are you doing?
I am fantastic.
Cool. Yeah, thanks for coming out. If you don't mind just quickly introducing yourself to the community.
Sure, everybody. Hello, foxes. You got a fellow animal here. I'm a badger. I am a contributor to the Badger DAO community and long-term user of ShapeShift and fan of what you guys got cooking. Participant in the airdrop. And thanks for hooking up the Badger community as part of that initiative. And I've been working quite a bit with Tokamak over the last 4 or 5 months, specifically around a new sub-DAO that we're launching called Citadel. And through that initiative, obviously, I've gained quite a bit of understanding of what they do in their core events and different ways to align with Tokamak and what they're trying to accomplish as decentralized market makers. So I was talking to John earlier today, and he thought it made sense for me to come and chat with you guys see what you got cooking for Core 3. Maybe talk a bit about, what Badger would like to do with Tokamak, and maybe get your guys' support as part of that vote.
Yeah, I yes on all counts. That sounds great. Just as a reminder for the community, Badger DAO is engaged in bringing sort of Bitcoin into the DeFi world. Although full disclosure, Spada Boom, I haven't looked at Badger DAO lately. Is that still your primary focus?
Indeed.
Cool.
It's hard. It's hard to waver. I personally can't waver away from that being a not a Bitcoin maximalist, but instead a Bitcoin enthusiast for many years.
I love how you guys just make a mockery of the maximalists because you're providing amazing utility using Bitcoin, but oh wait, you have to come over into the non-Bitcoin ETH world to take advantage of this. Great work.
Yeah, it's just maximalism at the core. I just think so stupid, right? It's so limiting, and a lot of the people that live and die by that mindset, they just put blinders on to the potential for actually, like you suggested, using Bitcoin. And putting it to use, right, which has always been the dream as an economy.
So specific to Tokamak, are you guys how is Badger DAO or Citadel currently engaged with Tokamak?
Sure. So Citadel DAO, for folks that don't know what it is, it's pretty much aiming to be the largest community-owned Bitcoin treasury in the world. So you almost think about it like a decentralized MicroStrategy, but leveraging the DeFi rails to actually put that Bitcoin to work and do it in a way where you have extreme transparency and the ability for community and token holders to have a say in how that treasury is put to work, along with sharing in the yield that's actually generated on that Bitcoin treasury. So that's what Citadel is. And as part of that initiative, it's kind of like a combination of 8 different DeFi protocols that came together to help make this a reality. Badger kind of sparking it all and investing quite a bit of time, effort, and resources into help accelerate the code base and what's actually being built, but along with other great protocols like Convex and Frax and Tokamak and Tribe and Ren and quite a few others redacted. And the whole idea there is, these protocols, if any of these protocols, and ShapeShift can probably relate, if you have influence, if you could potentially have influence around one of your largest LPs and work with that LP because of your say in what that LP does, in how they leverage and participate in your system, consume your rewards, maximize your return on those rewards, showcase and become long-term holders and participants in the ecosystem, like it's a pretty powerful thing. So the whole concept here is, using Tokamak, for example, if you have a Bitcoin-focused LP that has the ability to really drive influence across the DeFi ecosystem for yield on Bitcoin, and could really be that spark that Tokamak needs to drive Bitcoin throughout their system, right? There's no BTC reactors that exist today there. They don't really leverage BTC pairs across DeFi for the purpose of, for simplicity purposes, just calling it market making. Or if you're Tribe / Rari and you want to drive, you want to create large lending and borrowing pools around Bitcoin, because unlike Aave and Compound that have this enormous Bitcoin supply capacity, Fuse is the total opposite, right? There's very little to no Bitcoin being supplied or borrowed, or instead it's predominantly stablecoins and ETH. So now by having influence in a DAO and protocol that has a large Bitcoin treasury, you have the ability to really push that forward. Another example is Frax, in wanting to accelerate Bitcoin as collateral, as that's back in the Frax asset, and doing so through their AMO technology. Through something like Citadel, you can accomplish that, right? So that's really what Citadel is all about. And Tokamak being one of the 8 partners, they're going to have a percentage of the Citadel supply at launch, Volux Citadel, and they'll be able to vote and decide which protocols get whitelisted for that treasury to be put into, which assets get sucked into the treasury, and then, of course, where specific emissions or funding resources go for each of the different treasury deposits.
Kind of a glaring gap in the DeFi market generally with that just the lack of the Bitcoin related collateral. And it sounds like you guys are well positioned to address that.
Yeah. So.
Hey, I see you on John, or John's on stage, and we have Josh as well. You guys have already given some deep thought to Tokamak.
Yeah, and I'm actually curious also, Spadaboom, thanks for coming and joining us. So Citadel is kind of like Tokamak, but for Bitcoin liquidity. Is that a way to think about it?
Yes and no. It's kind of like Olympus without rebasing and bonding, and the treasury, instead of being predominantly stable coins, being Bitcoin denominated. If that makes sense. It's a treasury DAO, right? So it's like, if you just think about MicroStrategy has a boatload of Bitcoin. It does limited things with it, but, issuing bonds against, doing a variety of different stuff that they do. But imagine being MicroStrategy, and instead of the decision makers being the board, it's the community holders. And instead of being limited to the TradeFi infrastructure, you have the unlimited potential of the DeFi infrastructure. And in being a holder of Citadel and long-term holder, you actually have the ability to share in whatever yield is generated on that large Bitcoin treasury. But, one of the key problems in DeFi is there is no either individual entity or group of entities or protocols that push to have yield on Bitcoin, right? If you look at Curve, I think Bitcoin makes up something like 20% or 25% of the TVL of Curve. This might be a little dated. Maybe it might be like 15 or 20%, but nonetheless, it makes up that much of the TVL, yet under 1% of all Curve emissions or gauge votes go towards Bitcoin-oriented pools, as an example. So it's really difficult to earn yield on Bitcoin in DeFi. So as part of this initiative, Citadel is going to be a large holder of Convex Curve, other yield-influencing assets like Badger, assets like FXS and Toke, and different ecosystems where you can boost that yield in being a long-term supportive user of that protocol.
And you're going to amass the Bitcoin treasury through selling the Citadel tokens in the beginning during the whitelisted sale, and then the public sale.
And then there's going to be an ongoing what we call funding activity. So it's akin to that of bonding, but again without some of the limitations with those mechanics. But yeah, there's going to be a perpetual ability to buy Citadel at a discount by swapping either Bitcoin or yield influence assets like CVX, for example.
Yeah.
Mm-hmm.
I see. And then once you hold the token, then you can help direct what you do with the Bitcoin that's in the treasury.
And then earn a percentage of the yield that's being earned on that actual Bitcoin.
Yeah, got it. Okay, cool. Thanks.
Yeah.
So hey, Spadaboom, thanks again for joining us. Great to have you. One thing I want to ask, and I see Ron, one of our DAO members of PTT, actually asked this in the stage chat, but it's kind of the same question I'm going to have, and we're going to have a larger discussion here among the DAO over the next week of just like, what is our strategy with our toke votes and how we want to apply that. And I think one thing that would really help, and I really, again, appreciate you coming and talking on behalf of Badger, is just what basically, I think you gave a good overview of what Badger is and more or less, the benefits on the tokamak side. But why should the ShapeShift DAO in particular vote for Badger?
Yeah, it's not a super clear answer to be totally frank with you, but I think one of the unique opportunities I think that could arise here, and I'm not sure what I listened to the early stages of the call, and I understand there's a treasury primarily in stablecoins, Fox, and partially in ETH. But I was thinking if there was an appetite to diversify a percentage of the treasury into Bitcoin through voting for Badger as part of Core Event 3, this is really voting for the opportunity for Bitcoin to get better use within the tokamak ecosystem. But also, Badger, if you guys are familiar, is an asset that can boost yield on your Bitcoin, similar to that of, curve gauges, as an example. And the intention here is for Badger, if Badger were to get a reactor, the T Badger, which is the staked Badger in the reactor, would be added to the boost system for Badger. So if you hold T Badger, you would have the ability to get boosted yield on your Bitcoin and other things in our vaults. We have a very popular CVX vault that I think is the second or third largest holder of CVX in the world. And there's a CVX CRV vault. There's a couple stablecoin vaults, but for the most part, the Bitcoin vault, the Bitcoin Curve LP vault, is the primary boosted vault. So it's if I'm in your guys' shoes, you have the ability to help push Badger into the reactor or into the core round, and then as part of that, if you were to hold Badger or T Badger and also take a percentage of your Bitcoin or some of your other assets and put it in the vault ecosystem, you'd be able to get a boost on your yield and drive more productivity within the treasury that you guys have today or you intend to have in the future. So again, it's not a absolutely bullseye, let's call it value proposition, but there's outside of some of the soft benefits, being it DAO to DAO relations and some of those other things that could come with collaborations in the future. It's more there's more of a tangible benefit as it relates to driving additional yield on Bitcoin and getting a boost on that yield in the Badger system for you guys.
Absolutely. Yeah, I appreciate that in that context. Getting Bitcoin into our treasury is definitely something we have talked about, and I think we are interested. So hearing that context, that's helpful. ShapeShift has always been, before we were DAO, but certainly now relatively asset and chain agnostic, and Bitcoin has always been a large part historically of things that ShapeShift does. So I do think that there's merit and interest to that. I think one piece of advice I'll give you is just that, we have had some of the reach outs, and we're going to be talking, I think, wider as a community here over the next week and into next week as Core 3 starts. My guess is there's going to be a lot of various pitches. And if there's anything Badger could consider, making it just kind of a more tangible offer or some sort of partnership recommendation to the DAO, I think that would help the DAO kind of coalesce on, throwing some or a large portion of our votes your way. So just a suggestion, not something you need to necessarily do now, but I do think that there's going to be a lot of interest here, and the DAO as a whole is just considering what is the best thing to do with our votes.
Yeah, that sounds great. That was, my main prerogative today was just getting a feel for what your guys' plans are around Core and just kind of being more of a listener. And then from there, and then of course, hearing exactly what's going on with the DAO and all the updates you guys shared were fantastic. And then just from that point on, trying to find something more tangible to your point and try and find a point of collaboration and opportunity so it makes sense for everybody.
Yeah, hey, this is Josh again. I can tell you just our very initial conversations about like the plans for Core is that we've definitely identified a couple partners that we are keen on that we either have or holding some of their tokens or we've had some kind of partnership with them before. And Badger DAO is in that list. And then the other unknown that we don't know anything about yet is the bribing. The bribes got pretty real in Core 2, of which we were a part of, and we offered some bribes. And so, to be totally honest, that's going to create a factor for ShapeShiftDAO allocating our votes, is what the different bribes, and to John's point, like other possible tangible benefits of a partnership and supporting people in Core 3.
It's great because we're probably going to bribe. So here we go.
All right.
Yeah, so on that note, and thank you again, Spada, for coming. I know that the community appreciates it and recognizes it. We really appreciate when other projects and protocols come and talk with us here in the Fox Den. So, I myself and a bunch of others here are definitely big fans of Badger, and, one way or another, whether you get a reactor or not, we always look forward to finding ways to collaborate in the future.
Yeah, same. Totally agree.
So to just kind of move on here to the macro tokamak strategy and to what Josh is getting, we've had a little bit of a discussion here in the Tokenomics public channel, and we're definitely interested to hear more from others in the community before we make any decisions. So again, as Kent mentioned, Core 3 starts on Monday. It'll run for about a week. So we basically have in the range of 10 to 14 days to decide what our final votes are going to be. And I think there are a number of factors. So as Josh just said, there will likely be some degree of bribes. And, one strategy is to simply throw our votes to the highest bribe amount. But we don't necessarily have to do it that way. I mean, another thought is to look for projects that we want to support and that we want to form deeper relationships. So, Badger could potentially be one of those, with Spada up here. Again, appreciated that he's coming and chatting with us about this. And there's other projects that, we might want, that we will want to consider on a relationship level, ones we already know, such as Tribe and, Thorchain and Silo, but also other ones that we may not have thought of. So, one strategy, again, is to simply go to the highest bribes. I'm sure there will be a number of toke holders that will do that. Another strategy is to, basically go more idealistic and not necessarily just go towards the bribes, go towards what we think are the best projects that we want to form deeper relationships with, and we'll add more to the tokamak ecosystem, which we're a part of. And a third strategy might be to kind of do both those things. We don't necessarily have to place all of our votes in one basket. We could partially, set aside some that we primarily go towards what we think is the best bribe for vote. And another portion could go just towards partner projects that we are interested in supporting or working with or deepening our relationships with. So there's a lot of interesting kind of game theory here, just in terms of what is the best way for us to use the substantial amount of token that we have acquired by, being a beneficiary of getting a reactor ourselves. So I don't necessarily know what the right answer is. I could make an argument for any or a portion of all of those things. And I am really curious to hear from other community members if you all have an opinion, or if you think there's another strategy that I didn't lay out here that's just also worth considering.
I can tell you that I think we should have some kind of split between some portion of our votes are totally economically based on where the best bribes are, and another portion is for partners and supporting. I think we need to do some support to all the projects that we like. That's my first take, is that I think it's 4 or 5 projects that you mentioned we should vote for all of them to some degree. Determining to what degree is one factor, and then I think we should have another allocation of votes that's really just looks at the helping diversify and increasing the position of our own treasury.
That sounds like a reasonable approach, Josh.
At what that split is, I'm not sure.
Devil's in the details.
Yeah, no, I think I agree with that on a high level, Josh. But yeah, like Ken said, devil's in the details because and there's also diminishing returns here. The more we split our votes, the less impactful any singular vote or our bag of votes becomes. So we want to think carefully around how many projects do we want to spread votes around, what bucket do we want to set aside basically for financial incentives, e.g. bribes, and what portion do we want to set because we just really want to help our projects. And do we spread those equally among those projects that we're trying to support, or do we kind of weight them based on things? And and this might change. Like, for example, it might become clear 3 days into the voting, just like happened to us in Core 2, that certain projects are more significant contenders than others. And arguably, unless they're also offering bribes or something on the financial incentive side, I don't know if we should throw our votes behind, a project that's in 20th place or whatever that doesn't have a chance to make it into the top 5. So, in my opinion, the votes should go preferably to some, like you said, some combination of those financial incentives, but also a combination of projects that we want to partner with, that we want to support, but also have a chance of actually contending. We have a large amount of votes, but we don't have enough votes to make any singular project the winner by ourselves. At least not based on the votes from last core. So I want to think about those things.
That's a good point. There's a third bucket there, and maybe one of these buckets we decide has a 0% allocation, but there's projects that are partners of ours that we want to support. Then there's projects that are offering the most bribes, and then there's the intersection of those two, which is projects that we want to support and that are offering bribes and are looking good in the ranking. And so now 3 different buckets that we could say 20, 20, 60 or something like that. But that kind of allocation we could determine even this week, and then the details of which projects fit into which bucket we could work on next week.
Yep. No, that makes a lot of sense. And maybe this is something we should just keep discussing, asynchronously over this next week in the tokenomics channel, and just, try to come to a determination of what we think the right split is. And I think we're going to have to stay nimble. I mean, we know a lot from the core event last time that these things can change very suddenly. I mean, at one point we started Core 2 and we were far and away the leader, and then we dropped, I think, as low as 10th place, and then ended up back at number 1 by in the last minutes of the Core 3 or the Core 2 voting. So these things can change a lot. I'm sure it'll be exciting. We have the fortunate position of already having a reactor, so we can be on the more fun side and the less stressful side of this time. But it's still really important to stay up to date on this, and to just be talking, I think, regularly as this goes on.
And so it starts on Monday, and then how long does this core event last?
I think it's a week. I think that's what it was last time, right? I haven't heard anything right, that it was. But I'm pretty sure it's a week. So I think it'll start Monday and then end the following Monday, around the same time as it starts.
Yeah. Boy, that was such a nail biter last time. It was just man, this thing's toying with our emotions. But in the end, we won.
It was a crazy up and down emotional roller coaster for many of us who were really into that. And, and we've gotten a lot of benefits from having a reactor. So I think we've kind of shown, at least from my perspective, it's clearly been worth it, that we went as hard as we did to get that reactor. And I think the competition will probably be even more fierce this time. So I think it's important for us to listen to messages from other DAOs, such as Badger, which was just, from Spada, just talking with us, which was awesome. But also considering all these factors.
Yep. One related point that just came up here is, getting exposure to Bitcoin. It's sort of kind of been on the back burner, this notion of us diversifying beyond stable coins, because right now the real priority is stacking stables. And the market just dropping kind of in tandem really validates that strategy. But over time, and this has always been our approach in tokenomics, is getting more exposure to crypto blue chips like ETH. And of course, nothing is more of a blue chip, or I guess in its case, an orange chip than Bitcoin. So that's an exciting prospect to start to get Bitcoin on our balance sheet. of course, a wrapped form.
Yeah.
So yeah, good stuff on tokamak. We have plenty to talk about. Anything else, guys, at the tail end here?
No, I don't think so. I think that point that Spot brought up, just in general, I know it's something we've talked about on the TMDC and in other chats around the DAO beforehand. I'm personally I do think we should have some form of Bitcoin exposure in our treasury, whether that's wrapped Bitcoin or otherwise. I don't know that it's higher priority than the things that we're already acquiring in terms of stablecoins and ETH. But I do think, arguably, as the market grinds down further, it gets more and more attractive to get that exposure to Bitcoin, because it is generally, on the macro level, the crypto asset that is least likely to go down too much compared to everything else.
Absolutely.
So yeah, I don't know, something for further discussion. I don't know that I would want to change that anytime soon, but at some point, I do think it's important that we start getting some exposure to Bitcoin in our treasury.
Yeah. Timing could work out for us well if we reach our stable goals, and then meanwhile Bitcoin has been slammed to the ground. We're getting potentially a good price. But yeah, certainly no imminent decisions along those lines, but something to keep in the back of our heads. And love what Badger is doing. Spadaboom, I'm not sure if you're still in the audience, but thank you so much for stopping by and lending us insight. And yeah, guys, give Badger a closer look too, because they're doing some noble work in terms of making the maxis look like the idiots they are. And on that happy note, I guess we can close it out. Stay safe out there in the markets. Don't use leverage. If you're actively short right now, just via conventional shorting. Remember that things can reverse quickly, and stay safe and keep kicking ass, guys.